inspect and sort of verify whether we can acquire the ship. So we'll give that adequate notice to all the investors.
Sure. And this 5 to 10% growth rate, it's which we have now moderated from 10 to 15% earlier. So this is for which period which we are referring to? It's for like next couple of years, or it's
No.
only...
This is FY24 only.
Okay. And
Yeah.
how we are looking at FY25?
25, we are looking at 10 to 15%. And I think that will continue for the next 3 to 4 years.
Got it. Because if I just look at the numbers in the first 3 quarters, so it's 10% seems a little difficult to catch up for the entire year on the revenue side.
Yeah, I mean, so around 8 to 10% is what we are looking at. I think, Ashish, what is it cumulatively so far for 9 months?
This is close to 2.5%, 3% in fact.
Yeah.
So basically, the guidance is for profit and revenue both. Probably for revenues, it might be kind of more than 5% for whole year as like quarter goes on. Revenues might be better than the profit growth might be better than the revenue growth.
Sure. Just one last question. The CVS margins have come off quite materially from the numbers which we had seen, of 28-29% EBIT margins. They are now at nearly 22-23%. So how are we seeing the CVS margins going ahead? Because any color on the freight rates, or how's the volume side, anything on that part? I mean, would the margins be at current levels ahead, or we could look at some improvement?
Yeah, I think, see, on with the competitive pressures that are there on the Western coast, as well as the rates not really moving up too much, though the cost structure still remains a little bit on the higher side, with fuel prices also now moving up because of the Red Sea crisis, that is the bunker prices. So that is having some amount of impact on the margins. But again, this is something that we've been saying that this will come down. We are still at around 40%, 36% EBITDA levels for the quarter, and 40% for the full 9 months. So we've been saying that these numbers are definitely going to come down a little bit to more reasonable levels of 30%. So I think this is, it seems a little high, but this is something that we've also been guiding towards.
Just one last question, similar to just a follow-up on this. So these new ships which we are getting it made, so how are things progressing there? It's very much on track, or there could be any update on that?
Yeah, it's on track. Yeah. It's all on track, and the delivery is in calendar year between January and March 26.
Okay. I'll come back in the queue if I have more. Thank you so much.
Sure.
Thank you.
Thank you, sir. The next question is from Mr. Kripa Shankar. Sir, please go ahead.
Hi, good afternoon, and thank you for the opportunity. So we need one additional question on the CVS segment as well. So is there perhaps any one-off effect on the CVS side this quarter because of rains in the Chennai port, or some other challenges which can come back probably in the fourth quarter?
Yeah, those have always been there. There was like a cyclone sometime back on the western side, and then there was on the eastern side, we had the Chennai floods, and that got affected. That affected operations for a week, 10 days. And, we have all the ships operational in Q4, so it will be slightly better for sure. But again, some volume is also, we're seeing a little bit of weakness on the volume side also. Like, for example, tile movement from the west coast has reduced a little bit. So So some of that will have an impact, but we are confident that we should probably get to closer to last year's Q4 numbers.
Right. So a 15% YOY decline, how much would you attribute to volume decline and with respect to pricing?
So I would say a lot of this is sorry, Ashish.
So I think somewhere close to 60% would be the volume decline, and the rest is the price decline.
Okay.
Or you may say, like safer side, the 50-50%.
Sure, sure. So the capacity build up what you're talking about with respect to in the competition side, how much sort of a capacity addition have you seen in the last quarter? If you can throw in a number perhaps.
So what happens is that sometimes capacity comes in and goes out depending upon some of the foreign flag vessels are very opportunistic. They'll see that there is some demand, they'll come in and then they'll move to other markets because there is with the Red Sea impact, we are seeing that freight rates across the world has started to move up. So some of the companies might move out. So we don't have a exact number of fixed capacity that has been added. It's more like more floating capacity that comes in and goes.
My next question would be on the freight division. So what I could clearly see is, your LTL proportion has gone up, and then the FTL piece of it had declined on a YY basis, if I'm not mistaken. Yet, your margins have come in lower if I look at it on a YY basis as well. So is it more of LTL volumes and perhaps the load factors or not being as high on specific routes due to which the margins have declined, or is there any other reason why you are stating that there should be a margin decline?
Yeah. Well, see, volume is been more or less the same. If you see the revenue, we are almost at the same levels as last year. But what happens is that there are certain amount of fixed costs, and the fixed cost, whether it is at the hub level or whether it is a people level, etc., that starts to impact if you don't have any growth, because that cost structure has gone up in the last year. So I think the throughput across the network that remains good. It's just certain amount of fixed cost that is moved up, which we will catch up in the next in this Q4 as well as going forward. So then we will see the positive impact. We the last year when we moved a little bit towards the FTL side, there was some directional loss on this in terms of the capacity utilization, and that is starting to play out here on the infra side. Now we will come back and pick that up. So not on the network side, but on the infra side, yes, there is some capacity that has not been utilized.
Got it. Last question from my side on the supply chain business. Are you intending to add more rigs or given that multimodal has seen a fair bit of traction with the automotive sector and the production has picked up? So is there any scope of addition of that?
Well, we've been in the process of trying to get rakes which are of the newer types, which can take more capacity, including SUVs, etc. So we are still waiting for designs of those type of rakes to be approved before we place order for new rakes. So that has been constantly been pushed ahead, and we've not got a clearance yet. So hence, we don't have a guidance on when we'll be able to get a new rake. But notwithstanding, we've been hiring rakes from the market and growing the business.
Thank you and all the best.
Thank you.
Thank you, sir. The next question is from Mr. Jainam Shah. Sir, please go ahead.
Yeah, hi, sir. Good afternoon. This is Jainam Shah from Equirus Securities. So my question is related to the freight segment. So if we see that revenue has grown at around 2% on a 9-month basis, So just wanted to understand the reason for a lower growth. Is it because our competition from the road players is increasing, or is it because railway is dominating some of the region wherein Western DFC has started, or is it industry-wide phenomena wherein growth has lowered during this particular 9 months, or any other specific reason that you may highlight for the same?
No, I don't see the impact of railways anywhere specifically yet. But certainly the slowdown in general freight market is being reflected here. And certainly there is a certain amount of competition on the LTL side, as well as on the FTL side. There's always been competition. It's just that we have been more cautious about ensuring to protect our margins wherever possible. So yeah, so I think I would say more towards a slowdown as well as a little bit competitive pressures on the LTL side.
Okay, okay. And if we see our EBIT even or even the interest cost might be higher because of the addition of branches that we are taking on a rental basis, which is eventually coming below EBITDA line item. So is it like we have already covered the most of the Indian market in terms of FTL and LTL and addition of new branches, despite we have opened 30 new branches, there has not been any improvement on the bottom line, which is eventually leading to this lower ROCE for us. We are employing the capital, but the returns are not generating against the same.
No, I would not say it to that extent. The opening of new branches is not that substantial in terms of a cost structure, fixed cost structure. I think the existing infrastructure that we have has a cost, including the number of people that are there. And any new branch that comes up takes easily at least a year or two to give volumes as well as margins. So I would not attribute it to the new branch network. I would just generally say that there is a infrastructure cost of people as well as the buildings, places that we have on rent overall, not just the branches, and that if there is not enough volumes has starts to have a negative impact.
Got it, got it. And so this last one question for this transshipment trans-system JV. So we have almost crossed the yearly profit in this 9 months only. So what exactly is giving this kind of growth momentum to that particular JV? And is it addition of more and more contracts or getting more and more orders, or is it just the escalation part is also improving the same?
Most of that business is handling the logistics of Toyota in India as well as the Japanese OEMs. And as we've seen that almost all the Japanese OEMs have done quite well in the last 9 months, and actually, I would say the last year and a half or so. So I think that has contributed to the overall growth of this particular company.
Got it, sir. That's it from my side. Thank you.
Thank you.
Thank you, sir. The next question is from Mr. Pinaki Banerjee. So please go ahead.
Good evening, sir. And sir, just one question. Sir, just now you have mentioned that the interim budget which was presented, that the three major economic railway corridors are expected to be one positive for you in the long term. But sir, coming to the short term, as you know that elections are around the corner, and by the time it gets over, almost the first half of Q1 would already be over. So are you expecting any slowdown during this time from April to June period?
I think the trends always indicate that there is a little bit of a slowdown that happens. Consumers tend to pull back a little bit and save money, but there is the trickle-down effect of the elections itself that happens, and that has a positive impact. So, but the momentum of the economy still remains quite high. So there will be a little bit of an impact, but I don't think it will be so major.
Okay, sir. That's all. That's all from me. Thanks.
Thank you.
Thank you, sir. The next question is from Mr. Aejas Lakhani. So,
Hello. Yeah,
Yes.
hi, Vineet and team. Thanks for the opportunity. So, Vineet, couple of questions. The first is that you've called out growth of 10 to 15% for the next year. Could you just spell out how we can envision this growth? Because I'm guessing some ships which were in dry dock this year will come through in the next year, so we'll have some volume growth in uh, you know slightly in I'm assuming in seaways, but if there is so much pressure on freight and supply chain, we have reached, a good base, at least in the industry, even with the kind of volumes that we are seeing. CM is saying a very low single digit growth. How do you how should we reduce the 10 to 15% growth?
Okay, so the freight business, assuming we are going to close at almost flat or with a marginal growth of between 2 to 5%, should see a higher growth structure, specifically because of the areas that we are targeting from LTL, as well as some of the new branch openings and the other things that we are doing in that business. So we have a good pipeline there as well. So I think that should grow faster than what we've done in FY24. In Seaways, we think it will be more of a flat growth. We will definitely hit some dry docks, and we don't expect any kind of a major volume push, as well as or a value push there. But the supply chain business should see definitely a very good push, even though the SIAM indication is that the growth on the sector will be not very high, but there are other segments that keep growing. So, for example, this year we saw that tractors did not grow that much, but next year expectation is, with after the new budget that comes up, tractor growth, and generally after elections, there is sops to agriculture sector tends to increase also. So we will see that there will be a push towards agriculture movement. Infrastructure growth continues, which means that earth moving equipment companies also doing reasonably well. And then two-wheeler segment has picked up also in the last few months, as we know, which is basically an indication of some amount of rural growth exists as well. So that, as well as we have acquired some large contracts and continue to acquire large contracts in warehousing and other segments of the supply chain business. So all of that will contribute to a much higher growth trajectory for that business. I would think in the excess of 15 to 20%, and that should help us overall to get to this 10 to 15% for the full year.
That's very helpful, Vineet. Thanks. Just if I were to double click into the supply chain, could you just call out that from the revenues that you do today, could you give some, I don't know, some color on how much is four wheelers, how much is two wheelers, how much is tractors, how much is earth moving? Just some color on all of that. And are you gaining, like you mentioned about, specialized rakes for SUVs? So is it that you're gaining some market shares there? If at all, who are you taking share from? Because you're going to grow faster than the industry. So
So we don't split the numbers because a lot of that is integrated. For example, we do inbound logistics for a four-wheeler company as well as a two-wheeler company, and the supplier could be the same, and you're using the same truck to do a pickup from that particular supplier for both these OEMs, and you're bringing it to the same warehouse and then splitting that and sending it to the respective locations. And similarly, the trucks that the rakes that are being loaded could be multi customer rakes as well, or the yards that we manage are multi customer. So we don't really necessarily split it into these segments to share. Other than that, we are constantly looking to add more value to. So there could be three ways of really growing the business. One is that that particular customer from that particular plant has increased its volumes. So they were producing, let's say, 100,000 vehicles. Now they're producing 125,000 vehicles. The second is that same company adds a new plant somewhere and completely starts a greenfield project. And the third is there's a new company that comes in, and that company adds a new plant. So all these three areas are potential growth opportunities for us, and we are picking up businesses from in all these segments. So yes, we do end up taking some share from some competitors, but overall, I think it's the market also. The size of the market is also growing because some amount of outsourcing also keeps increasing by the clients.
got it. Very useful. And Vineet, just lastly, that given that gross margins in LTL are far like ahead of FTL, and given that yes, the mix has improved marginally, uh, was that not enough to offset the pressure from a margin perspective that 9 months we are still lower? So is that incremental delta coming, or the difference coming only because that the fixed cost has increased so much so?
Yes, so as I said, the network cost has not had any impact. The utilization of the network remains okay. So yeah, but the marginal improvement in the LTL side does not directly have so much of an impact on the fixed cost right away. So it takes its own time. So it has not really impacted positively yet.
Okay, got it. Thanks so much. I'll fall back.
Thank you, sir. The next question is from Mr. Vikram Suryavanshi. Sir, please go ahead.
Yes, sir. Hope I am audible, sir.
Yes, hi
Yes.
Vikram.
Okay, yeah, hi, sir. Good evening. Sir, just an update on we also have CHA and international business license, but we have not heard much on that side of the business. Now, with uh, fairly good share in the domestic side, most of our customers also might be having import or export of raw material and finished product through international route. So, is there any opportunity for us, or what are our thought process to focus on CHA and international business supply chain for this player?
We don't do any CHA kind of activity with our with the Seaways business, but generally we do a little bit of activity on the CHA side as well as on the freight forwarding side, directly related to some clients who are working with us. Where, for example, there are some clients who are moving chemicals, and we give them our tankers that we buy. We bought, and these are specialized tankers that we bought in from China. So we provide those empty tankers, go to, let's say, the Middle East. They fill with those specific cargoes. They come back, and we deliver it to their plants in India. Now, this complete door-to-door kind of movement we are doing using our first our own infrastructure, and secondly our own license, the CHA and CC licenses. But these are very, very small businesses, and they're just under the growth prospects right now. And like the opening of the office in the Middle East, these areas where we will see more growth coming up. We don't want to go into the very the regular freight forwarding, because the regular freight forwarding has no margins. We want to do very specialized forwarding, which is really integrated to our existing business. Basically, what we say is follow the customer strategy. Where a customer wants to go, we will go and follow and get the work done, so that that preserves the margin structure, as well as we are able to do not just their business in this segment, but contribute in the domestic logistics as well.
Got it. And in LTL, you said that our target is to reach 40% of revenue mix, and 30 branches we added. So the 50 branches is the target for end of this year, or no, just wanted to clarify that.
That's correct. It's end of fiscal 24.
And looking at the growth and all that, can we have broad number of how many total branches so far we might be having, and transshipment hubs for that business?
I think there is there in the previous slide, Ashish. If you go behind, one slide behind, please. Yeah, 25 hubs we have, and close to 700 offices.
Oh, I missed that. So sorry. Thank you.
No.
And last one is that since we talked about the shipping, and now though we are more predominantly domestic coastal shipping business, but do we see any chance that the Red Sea issue continues? Then probably the freight rate even for domestic can increase, or it will be purely on road versus rail for domestic?
Yeah, I think it will continue to remain road versus rail. There could be some impact, but unfortunately, the fuel prices are, once if they start moving up a little bit more faster than we are. So sometimes the growth of the fuel prices, if it is a little bit like a normalized curve, we can't necessarily increase freight rates too much. But if it picks up a little faster, then we are able to move the freight rates a little faster. And so let's see what happens. I think it's still very unpredictable with what's happening. Um, some opportunities also keep coming for going to neighboring countries. But again, we are a little cautious depending on where, what, and what is the margin you will get, including insurance costs. Insurance costs because of Red Sea has gone up. across the board on international waters.
Understood. Thank you very much, sir.
Thank you, sir. There are no additional questions. We have Mr. Alok Deora again back with us. Sir, please go ahead.
Yeah, thanks for the opportunity again. So in the LTL segment, you mentioned that in your opening remarks that you have not really been able to increase the share because of the higher competition now. Could you just elaborate a little bit? Because in the freight business, we are seeing really muted growth since some quarters now. And how do we see that overall freight business shaping up? And realistically, where do we see the LTL mix in the next couple of years?
Right. So, freight business, the growth for the last, I would say, 3, 4 quarters has been slightly slower, but before that, it was doing reasonably well. And I think this is what typically happens. And I'm going on a larger point here before I come to your point, which is essentially having diversified business interests like we do, freight business, seaways, as well as supply chain, so that when a sector doesn't do too well, overall the other sector helps, and that is the kind of consistency that we're bringing with the diversified services that we have. The range of getting to 40% is now, as I said, was for next year. And I would think that subsequently we would look at adding 100-200 basis points of increase every year. Challenges are coming from some startups in the LTL side who have moved from doing just last mile, pure last mile, to or also on the B2B side, trying to move the LTL at very, very low rates or basically at no margin. And of course, there's always been other regional players, a sector that have provided competitive pressure. So that will continue. It's just that, how well are we able to provide services to our client? What we have seen, interestingly, one or two, several customers are now coming back with increased requirement for FTL plus LTL combined. And we provide that service with a control tower where they are able to observe all of this together. So some of this is going to play out a little bit on the medium term rather than on the short term, where clients will feel a lot more comfort with working with us, and then hence we are able to then translate better volumes and better pricing.
Sure. And so this tax rate has been higher as compared to the previous quarter. That's primarily because of the seaways profits coming down, or the contribution from the seaways business coming down. So how do we see this tax rate going ahead? Like in FY25, what would be the standard normalized tax rate for us going ahead?
So it's not only for seaways margins, but also we got to have 32 crore of dividend as well. So in certain situation, dividend is also not taxable. And keeping that in view, the rate is quite lower than the last 2 quarters. I think in the next year, when we have shipping profits normalize, as we think of, so the rate would be around 13 to like 12 to 13%, as usual. It is in last couple of years.
Got it. Got it. Yeah, that's all from my side. Thank you, sir.
Thank you, sir. The next question is from Mr. Kripa Shankar. So please go ahead.
Yeah, thank you for the follow-up. Just one question from my side with respect to the supply chain business, the space addition. So just wanted to understand that is there any target with respect to how much of space addition we are going to do, and how much would be owned and leased out of this 14 million square feet?
Yeah. Actually, just go to the supply chain slide, please. So we don't have a target specifically because it's basically based on how we are able to acquire clients. Very recently we acquired a client uh, in the FMCG space, and the business has not started yet, and hence we've not added that capacity yet. But that would be about 300, 400,000 square feet of space, of actually covered space that will get added. Like this, there are constantly pluses and minuses that keep happening. One particular customer, we've been able to, they've given us more business, but we've reduced the, and I shared this experience in the past where we were able to provide a very good solution to them um, for a very narrow aisle kind of operations. And we've been able to reduce the amount of floor capacity that they needed. So we've gone higher, as well as the aisles are quite narrow, so you have the movement is very, very tight. However, it is very engineerily designed so that its customer gets maximum benefit, and you're able to bring a high degree of productivity and efficiency. So it's essentially client based, and I would say approximately 15%, 20%, 2.5 million is what we own across the country.
Okay. So, Vineet, is it fair to assume that so what I'm hearing continuously over the last 1 year or so is that you're gaining incremental contracts with respect to warehousing, and is it fair to assume that the supply chain margins will go back to the erstwhile levels of 10.5% uh, over the next couple of years?
Well, the business in that has the most highest amount of outsourcing in supply chains in India is the automotive sector, which also means that it has also very high competitive pressures. And we see some of the startups or some of the newly um, listed companies that are putting undue pressure on the pricing because they need to show some kind of margin for their businesses, or some kind of growth for their businesses. So that means that the margin structure tends to remain a little bit lower because of the concentration on the auto side. But the warehousing side of sector helps to bring it up. So I think this range of approximately 10-ish percent plus minus 100 basis point is perhaps more reasonable.
Understood. Thank you and all the best.
You.
Thank you, sir.
Thank you.
The next question is from Mr. Anshul Agrawal. So please go ahead.
Hi, thank you. Thank you for the opportunity. Good evening, Viniji. Had had a quick question on the LTL business. Would it be possible to outline the top 3 or 5 sectors to which our LTL business would be exposed, and would our network be skewed towards a particular geography?
Our second question is no, we are not skewed to any geography. We are present in all parts of the country. First is that we move towards, we do a lot of movement for engineering products, specifically which are related, and it's engineering, electrical, construction, some amount of as in home construction related material. We do some amount of textiles, we do some FMCG, but the broad sectors are the first two, three, more on the engineering, electrical, and likewise. Like we'll do on the FMCG, we'll do milk, which is like dry milk powder that moves across the country in bulk. Um, yeah, so yeah, almost all kinds of segments.
Got it. Thank you. Next question I had was, while I understand the long-term levers of manufacturing growth, percolating to this businesses, etc., would you be able to guide us on any short-term levers that you believe are present in this business to sort of see growth coming in?
Well, I don't see very, very short term. For example, when GST came in, that was a short-term impact because it forced a lot of people to immediately move from the informal economy to the formal side. Like that, I don't see any kind of an exogenous shock that comes up and suddenly has a positive or a negative impact on the short-term business. Like elections, for example, it doesn't mean that there is business. There's, we do movement for election material, but it's not significant. It's very small. So like this, I don't see any short-term, very specific levers.
Great. Thank you so much.
Thank you, sir. The next question we have with us Mr. Sandeep Wagal. Sir, please go ahead.
Thank you. Just one question with regards to vehicle scrappage, the new thing, right? So I believe our trans system would be part, or I'm just trying to check whether they are doing that, the reverse logistics for this. And do we have any plans, as TCI getting into this, logistics piece? And I remember, for TVS, we had designed containers or the trucks, right, where we could load more two-wheelers in one load, right? We had done some specific configuration. So anything of that sort we are targeting, with regards to this business, right? So that we have some kind of moat around getting reverse logistics coming our way, because I believe, these are going to be hub and spoke, model for vehicle scrapping, though it is nascent at this moment. But in any kind of, we have a view of taking this forward. That's it. Thanks.
So vehicle scrappage and reverse logistics are not really directly related, and we have no intention of getting into the vehicle scrappage business. And all our vehicles that we don't need to really get to the scrappage stage because we sell them much before. That's the first. And the reverse logistics will not really happen for that, but can happen for other kind of businesses, where there is a requirement, let's say today, for batteries to come back to to the manufacturer. So some kind of reverse logistics like that might happen. And we are geared towards that. And you're right, it will be hub and spoke, and we do that for some of our clients. What you talked about, what we did many, many years ago for creating a triple deck truck. And I think some of these things have become standard in the industry. We continue to do some level of innovation at our services level, so that customers are able to get the benefit and we are able to create a stickiness for them. So it's an ongoing thing. We don't have anything specific to share that is extremely innovative, but there is always something or the other that we are doing constantly.
Thanks. That was right. Thanks for that question being answered. Thank you.
Thank you.
Thank you, sir. There are no further questions. Now I hand over the floor to Mr. Ashish Tiwari for closing comments.
Yeah, thank you, Simran, for this call, and thank you, participants, for being with us. If you have any further queries, please write us back, and we will connect you back. Thank you so much. Good luck. Thank you.
Thanks.
Recording